say that they don't have to mark those to market until they sell them. And so they have a whole balance sheet filled with toxic assets that have lost over half their value or more. So in the case of SVC, when you saw a run on the bank, for whatever reason, you get people running on the bank because there's so little cash, the reserve requirements have been slashed to nothing. These banks are forced to sell their bonds at a huge loss in order to meet customer demands to get their money back. And if enough people redeem or withdraw their money, and the banks are forced to liquidate their bond holdings, which have been eviscerated by rising rates, then as we saw last week, a large bank can become insolvent in less than 24 hours. And that's exactly what happened. The FDIC can't handle this. Their insurance fund is only 0.03% of bank deposits. 0.03%, roughly $125 billion in FDIC liquidity backing over $9.5 trillion in deposits. And
Matt, those numbers again. The FDIC backs up $9.5 trillion. What?
$9.5 trillion worth of deposits, with about $125 billion in cash. That's 0.03%. So if just one or two banks fail, that's it. That's gone.
So again, it goes to deception, betrayal, collusion.
Yes.
What did Janet Yellen say? She says, who's going to decide who lives or dies?
It will be her, the overwhelming majority of the FDIC board, and members of the Federal Reserve. So they're going to decide which banks are worth saving and which banks aren't. And we all know which banks they're talking about. These are the commercial banks. These are the banks that we are seeing billions of dollars flow into now over the last several days. People are yanking their deposits out of these smaller banks because they're terrified for exactly this. And when she said this, she admitted the fact that they are going to pick and choose as to which ones they believe are too important to fail and which ones aren't. This is going to herd everyone into these banks. Every one of the people who have large accounts at these regional banks are going to pull their money out, and they're going to send it over to JP Morgan, to Morgan Stanley, to Citibank, to Goldman Sachs, because they know that those banks will not be allowed to fail.
Wait, one second.
Of the, she now has joined the. Where is it here? She has joined as the top economic advisor and director of the National Economic Council for the Biden administration. She was number 2 at the Fed. And when President Biden reappointed Fed Chairman Powell, I thought that they were going to appoint Lael Brainard, and she ended up being appointed vice chair. And the reason I thought that they would not reappoint Powell is because he was a Trump appointee, but they did. They reappointed him, and Lael Brainard was number 2. Now, Lael Brainard's whole thesis is removal of the commercial banks and a central bank digital currency. She is a modern monetary theorist. So think about this. Now she's left the Fed and is working in the White House. Think about this for a moment. This act is going to herd everyone out of the thousands of small regional banks that provide customer service in the lobby and a good experience that what banking used to be. Now everyone does it on their iPhone and on their computer. They don't go into the bank as much. There's not as much interpersonal communication and relationships. So those banks are going to go bye-bye because everyone's going to pull their money out of those banks because they're scared. What if you have a mid-sized company with $10 million in a regional bank and you're afraid that if we see more systemic problems, which we will as rates continue to rise, putting more pressure on these horrible bond portfolios, and they start to fail, everyone is going to yank that money out as fast as they can and send it to the big commercial banks. Now, you're going to have everyone penned into a handful of very small banks or very large banks, a small selection of them. What happens if indeed this is the type of plan that they are trying to do? where they herd everyone into a handful of these banks, and then we see a Bear Stearns or a Lehman Brothers moment where one of them is allowed to fail. Wells Fargo, maybe, or Morgan Stanley, or Citibank. Just one of them fails, creating panic. Everyone panics. That money is now vaporized like that. FDIC doesn't have enough to back it. So what happens then? In comes the central bank digital currency on a white horse. We're here to save the day. And this shows why we need to get rid of the commercial banking system. Now, again, this is hyperbole. This is I'm just extrapolating her thesis, where her whole idea was to get rid of the commercial banks and enact monetary policy directly to the citizen or the consumer on their iPhone directly from the central bank. So all I can simply say to you is this: the banks are in trouble. We're going to increase the tremendous amount of inflation that's already into the system. We're going to increase it to bail out those banks that are systemically too big to fail. And they've already told us it won't be via taxpayer injections or bailouts. They've told us that FDIC only has 0.03% backing, so that won't work. So they'll print money to bail those banks out. But everyone's going to flood into the commercial banks. And then they are ripe for whatever they have in mind. If they let one of them fail, just one, everyone will panic and embrace the new CBDC currency, which we have been told by the Bank of International Settlements that everyone must have. All countries that are part of that network, the BIS network, has to have an operational CBDC by 2025. Who knows? Maybe we'll have one much sooner than that, the way that this is all going. But